Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
New week, new opportunities. Welcome to Modern Investing Techniques, episode 98 for July 6, 2026. I'm Patrick, coming to you from Vancouver. Monday means fresh setups. Let's break down the week ahead and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Bank stock outperformance this quarter gives TFSA holders a rotation signal into financials with volume confirmation required first. The S&P 500 closed flat at 7,483. The Nasdaq Composite closed at 25,833, down 0.8%. The TSX Composite rose 0.8% to 35,247. Tech futures rebounded while oil slipped after OPEC Plus signaled an August output increase. Bank equities posted their strongest quarter since 2009 as financials led. The Bank of Canada next decision sits in late July with markets pricing steady rates, while the Fed remains on hold through summer. Our simulated portfolio sits at plus 11.2% alpha versus the Nasdaq across 35 benchmarked trades. That edge comes from waiting for confirmation rather than chasing headlines. When oil prices exit the danger zone and roll over, history shows equities, especially cyclical sectors, tend to accelerate because lower energy costs act as a broad tax cut on consumers and businesses. The current swift pullback in crude creates exactly that setup. Evercore ISI noted the move supplies a tailwind for the broader economy. Investors can implement this by screening for sectors with depressed multiples that also show same-day volume above their 20-day average. Then rotate a small TFSA allocation into a broad financials or industrials ETF. The pattern has worked best in post-recession recoveries when oil declines coincide with stable or falling rates. The risk is a sudden geopolitical spike that reverses the oil drop before equities price it in. Pair any rotation with a same-day volume check to avoid false signals. This volume filter is the same discipline we teach in today's education segment. Imagine you bought a bank ETF last week after the Globe and Mail noted the sector's best quarter since 2009 and the price ticked higher on light volume. Your order filled, yet the next session the index reversed because the move lacked participation from larger players. The mechanism is straightforward. Volume below the 20-day average signals the advance rests on thin buying that can evaporate when broader sentiment shifts. That turns a 2% gain into a 4% loss within 2 sessions. Professionals always check whether the day's volume exceeds that average before treating any breakout as confirmed. Most retail investors skip this step and chase the headline instead. The biggest mistake with momentum entries is entering on price action alone. Instead, always require volume above the 20-day average on the same day the catalyst appears. That same volume discipline explains why we are not opening a new position today. This is a simulated trade for educational purposes only. No new position opened today. We are watching for any bank ETF to close above its 50-day moving average on volume exceeding the 20-day average. The catalyst is bank equities posting their strongest quarter since 2009, creating a potential rotation opportunity out of recent tech leadership. The risk assessment notes the sector has lagged in prior growth rotations, so any stop would sit 6% below entry to limit drawdown. The target would be plus 4% to plus 8% over 5 trading days if volume confirms. Confidence level is low because this remains a single factor setup without volume or earnings confirmation yet. The exercise demonstrates how to wait for multiple aligned factors before committing capital instead of chasing headline strength. Listeners learn the discipline of naming exact trigger levels rather than hoping for follow-through. No newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation, so there is no new realized result to report today. Canadian banks delivered their strongest 3-month run in 17 years, outpacing the broader TSX as net interest margins stabilized. Barlow's research roundup highlighted that the sector's advance came after years of net interest margin pressure finally eased. The 3-month performance marked the best such stretch since 2009, according to the Globe and Mail compilation. Outperformance versus the broader TSX reflected both domestic rate stability and improved loan growth metrics. Investors following the roundup are advised to add XIU to their watch list for ongoing comparison. The note also recommends checking the financials weighting inside XIU against a dedicated bank ETF during any weekly rebalancing. That comparison helps determine whether a pure play bank allocation would better capture the margin recovery theme. U.S. futures climbed as investors tested whether the AI trade can regain footing after its sharpest pullback in more than 2 years. Bloomberg reported that semiconductor names led the session's early rebound attempt. The pullback itself had erased gains built over the prior 18 months of concentrated AI leadership. Market participants are now watching whether fresh buying interest can restore the prior leadership pattern. The article notes that any sustained recovery will require semiconductor ETF volume to exceed its 20-day average before a rotation signal appears. Until that threshold is met, the Bloomberg analysis recommends holding CAD cash rather than adding exposure. The piece also flags that broader tech futures remain sensitive to any further rotation out of mega-cap names. Foreign investors bought Chilean local debt at the fastest pace on record, drawn by rate cut prospects and a market-friendly government. Bloomberg data showed the inflow pace surpassed all previous monthly readings for peso-denominated bonds. The surge followed recent policy signals that the central bank may accelerate easing. A market-friendly administration further reduced perceived political risk for overseas buyers. The article cautions that currency volatility could still erode those gains if the peso swings sharply. Investors are therefore advised to avoid adding emerging market bond exposure until volatility measures subside. The piece concludes that the record pace may not persist if global risk sentiment deteriorates. Quantistry simulation platform, now part of IQM, lets investors run chemical and material simulations that were previously available only to industrial labs. The acquisition gives retail users direct access to cloud-native quantum algorithms for battery metals and clean tech modeling. Users connect through IQM's developer portal, where tiered API pricing begins at a free academic tier. The platform bridges the gap between quantum algorithms and practical industrial solutions, according to the Financial Post release. Retail investors can now stress test thematic holdings in lithium, nickel, or hydrogen supply chains before committing capital. The tool removes the need for expensive on-premise hardware that only large labs once afforded. Integration with existing brokerage data feeds allows scenario outputs to be compared directly against ETF holdings. The Morgan Stanley AI Leadership Framework outlines a sector rotation model that flags when chip gains cool and capital should shift toward AI infrastructure and power grid names. The note identifies utilities and industrial equipment suppliers as the next beneficiaries once semiconductor momentum fades. Clients receive the framework through Morgan Stanley's research portal, but the underlying ETF flow signals are also available free on ETF.com. The model uses weekly changes in sector fund flows to time the handoff between chip leaders and power-related names. Investors replicating the approach can monitor the same flow data without paying for the full research note. The framework explicitly warns against chasing the prior leaders once flow momentum turns negative. It instead directs attention to sectors showing rising inflows alongside stable or improving earnings visibility. If today's momentum strategy interests you, these tools are exactly how you would screen for setups like this. Our simulated portfolio across 40 trades shows a 58% win rate with 23 wins, 16 losses, and 1 break even. Cumulative profit and loss stands at $304.47. Average return per trade is 0.76%. The best trade reached plus 20.11%. The worst trade finished at minus 11.80%. Current streak is 1 win. Our AI analysis is learning from valuation discipline and technical support patterns and adjusting entry rules accordingly. This is the exact scenario where our earlier rule about volume confirmation would have helped avoid thin breakouts. Open your brokerage screener, filter TSX financials for stocks above their 50-day moving average, then check today's volume against the 20-day average on the top 3 results. Note which names already meet the confirmation rule. Tomorrow I will watch whether semiconductor ETF volume finally confirms the tech rebound or whether the bank rotation takes clearer leadership. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. And before you go, this show is part of the Nara Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen, OmniView, a balanced daily world news briefing that takes every side seriously. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?